The massive pullback might finally be here. This morning in the Asian session, gold sliced right through the critical 4,500 support level. In just 2 days, it has peaked over $160, completely swallowing last week's gains and dragging the price all the way back to early April levels. This price action is no longer just a simple technical pullback. It's an absolute confirmation of a medium term bearish trend. What a brutal sell off. The 10-year US Treasury yield just printed a new high not seen since February 2025. Smart money did the math, instantly dumped gold and rotated heavy capital into dollar and treasuries. Not to mention, we are entering another macro super week. Last week, CPI and PPI prints already have the market terrified of sticky inflation. If Wednesday's ADP combined with blow past expectations again, the market will confirm inflation is structurally entrenched, completely wiping out the last remaining hopium for rate cuts. The market will default to a higher for longer rate regime. For gold, that's an absolutely devastating macro headwind. And Thursday is the Fed rate decision. Having watched hawkish stance is the starting gun the market fears the most. Interestingly enough, he still hasn't made a single public statement yet. The current market panic is largely just front-running his historical hawkish reputation. If his upcoming rhetoric isn't as hawkish as expected, gold could actually catch a relief rally. Conversely, if he doubles down on a hardline quantitative tightening path, that would be the catalyst for an absolute bloodbath. And moving over to the US equities, the entire market is holding its breath for Nvidia's earnings. There's a zero doubt they will be top and bottom line estimates, but historically, every time they print, it triggers a broader market pullback. We are highly likely to see the exact same playbook unfold this time. So gold could very well get dragged down alongside equities in a liquidish flush. And furthermore, for the US AI sector, it is studying down some serious correction risk. As the ultimate pricing anchor for the global AI industry, NVIDIA just posting good numbers isn't enough. The real focus is the forward guidance on the earnings call. If they hike their full-year guidance, it proves AI capex is still in an aggressive acceleration phase. The primary AI trend will maintain its dominant strength, and any subsequent dip will be a massive buying opportunity. But if guidance misses the whisper numbers, but if guidance misses the whisper numbers, or they just maintain the status quo, a brutal tech-wide correction is almost guaranteed. And finally, let's touch on crude oil. A lot of people are starting to forget about Middle East tensions and a straight blockade, but that terrorist has never left. It's almost the end of the May, and there is still zero progress. In fact, it feels like it's escalating. The longer this straight shock code drags on, the more explosive the eventual upside on oil will be. The latest intel: Trump is preparing to restart military operations against Iran. Notice how WTI and Brent have quietly caught a serious speed over the last few days. If kinetic conflict actually breaks out, crude ripping back to previous highs is a high probability event. As always, this